Hi everyone, this is David Marsh with EminiTradingStrategies.com. Today is August 25th, 2010. You can see we're coming out of no zone just a few minutes after the opening bell, so we're going to try to catch a high probability trade, which is the normal system entry coming out of no zone. That's the NSE, as you'll hear me refer to it over and over again. Now, right now, I'm looking at my chart, and of course you don't see all of my parameters that I have up on the screen. I have Pro Indicator that signals for me, and of course we teach all the parameters in the course. But right now I know that my worst case scenario fill on this trade would be 1044 and a quarter. Now that may change, and it probably will change. This market continues to go up. My price entry is going to change as well, but I always enter on a limit order at my worst possible fill price, and normally I get positive slippage as I'll get the signal bar, which is a little dot, and I'll typically get a better fill price and can use that to my advantage and try to grab more profit. Now, a high probability NSE such as this one here has the potential for 4, 8, sometimes 10 ticks, but we're just going to go for 4 ticks, try to catch a nice one and done. I need to set my ninja up to take my break even, or my stop loss to entry break even after 4 ticks of positive price movement. So now things have changed a little bit. We're now looking at 44.75 as my entry. As soon as I see a signal, I'm going to enter at 44.75 limit, and hopefully we'll get filled and we'll catch a trade and see what she does. So we're really close to getting a signal here. Just not there. It is. Let's jump in. Now look at that. I wanted to go in at 44.75. I got in 3 ticks better. It upticked, and I got filled here at 45.50. So got a really good fill. So my initial target on this was 43.75. Had I been filled at 44.75, keep in mind I was happy at 44.75, and as I said, a lot of times we get positive slippage. We get in at a much better price. So I could use this to my advantage now. I could take this down 2 or 3 ticks and say, well, I was going to jump into 44.75 anyways. I can jump out at 43.75 and make more profit on the trade. Another advantage is if I get a reversal signal, which we may get, and I have to reverse, typically will not lose as much on the trade. So we're going to wait and see if we get a reversal signal. And if we see a normal system entry, that is not necessarily a reversal signal. Okay, they're different. A reversal signal can happen on an NSE signal bar, but an NSE in itself does not signal a reversal. But if we do get a reversal, then I'm going to reverse and try to recover what I lost. But because I got such a great fill, if I had to reverse up here, probably only would have lost about 4 ticks. So trade's moving back in our favor, so we're just going to let it cook, do its thing. And but that's one of the benefits here, is by using limit orders at your worst possible fill price. And like I said, we almost always get positive slippage on our entries. And 3 ticks was actually a really good one, to be honest with you, but normally it's 1 or 2 ticks, but 3 ticks is nice. So it's, hate to say it's easier to make your profit, but you're definitely more likely to make a profit, especially on a high probability setup such as this one. So again, I could take this down to 43.75, but I'm just going to try to get a point. I'm happy with the point profit. If it touches 44.50, my stop loss will move down to entry, and hopefully we'll jump off with a profit. There we go. Let's see if we can jump off and get filled down here, and there we go. And let's just, because we got a couple minutes, let's see if we would have hit our initial fill there, our initial target of 43.75. So we're actually already 1 tick there. So had we gotten filled at our worst case price, we still would have been in the trade. We would have not have moved our stop loss yet. Okay, so just keep that in mind. We'll let this go for another second or so, and we'll see if it can come down and touch 43.75. But again, good example of how you can use that better fill price and the fact that it's a high probability NSE to take more money off the trade. So we actually, had we stayed in, we would have been going for the 43.75. That have actually been a 7-tick trade. You maybe want to drag it down for 8 ticks. That's fine. These are really good, strong trades. So in any event, we'll go for another minute, see if it wants to come down here to 43.75. And but in any event, nice one and done trade. It's only just before 9:40 in the morning. We're done trading for the day. So if you're a 10 contract trader, $50. You know, you're up $500 for the day, and I guess if you're on the West Coast, you can go back to sleep. But if you're trying to stretch it out for more, you're still in a trade. A lot of my students will trade the high probability trades and run a trailing stop and try to catch 2+ points. So there we go. It's hit that 43.75. So our stop loss would have been brought down. We may or may not have been filled. I'm not sure, but it definitely hit our target on our worst case fill. So really good trade right there. So there it is live again, the no zone NSE high probability setup, and worked out nice. So thanks for watching, and we'll see you on the next video.